All right, so today I wanted to talk about one of my favorite stocks in the market right now, and that's Visa. Obviously, very popular stock. Everybody knows what Visa is, so I'm not even going to worry about that. Um, there's a lot of things to get into, but the first one would be, and for reasons that I like this, I mean, the first one would be, I mean, if you look at the dividend, again, you're not buying Visa for the dividend, but when it comes to the dividend, they are growing it at 18% over the last 5 years, which is very, very impressive. Again, the current dividend isn't even 1%. But again, the payout ratio it's 20%. So they could pay probably a 4.5% dividend if they wanted to right now. Again, which isn't crazy impressive, but the impressive thing is just how fast they're growing. And again, if you go back to the historical yield on cost, you go back. If you'd have bought it 10 years ago, you'd be over 4% right now. I mean, and look at this growth. Again, they're consistently growing it. Again, 2013, 40 cents a share. Now it's up to $1.80. So they're growing that very well. So again, you buy this company, you hold it for 10 years, you're going to be looking at over a 4% dividend. You go back, hold it for 20 years, you're probably going to be over 10%, right? So that's the first reason. Again, analysts seem to like it. Again, you're never going to want to buy solely based on analysts, but again, analysts, the average target's 21% over. Again, you get into the financials. This is where things become even more impressive. Again, look at the profitability numbers. Again, operating cash flow margin of over 60%, which again, they're consistently profitable. They are even growing that a little bit over time as well. Again, very impressive there. Again, gross margin 80%. That's crazy good. Return on equity also very good. They're also growing that over time, which is very impressive. They're at 42% this year. Again, that's insanely good. Let's go down a little bit here. Free cash flow per share, again, growing very nice over time. Again, that's exactly what you want to see. Not perfectly, but growing very nicely over time. That's exactly what you want to see. Again, current ratio is it's not great, but it's still not concerning. Again, you get into the actual numbers here. Again, very, very good, very good. There's nothing that's overly concerning here, at least in my opinion. Again, I stress here everything's my opinion. And a very important thing when it comes to investing is just because a company is a good company and the numbers look good doesn't necessarily mean you should buy it right now. The reason why, again, my opinion, but I would be comfortable buying it right now, is Visa is priced at a discount, at least compared to their historical numbers here. This is taking a little while to load here, but the first thing you'll notice is that it's very near its historical lows, right? In that when you're looking to buy companies, the first thing you need to make sure is that is it a good company, right? Is it growing? Does it not have excessive debt? Is it profitable? Is it like all the usual stuff? Strong return on equity? Does it have a moat? Like, is it going to be able to grow in the future? All that kind of stuff, right? But again, when you're looking at Visa, you also want to make sure that it's priced below its historical average when it comes to how expensive it is, right? That is a very important thing. And the other thing that I wanted to bring up here, now it took a little, it kind of froze up there for a second, but the other thing I wanted to talk about here is, again, we got to compare it to its biggest rival being Mastercard, right? And if we pull that up here, Mastercard is a very good company as well, in my opinion. The difference being is that Mastercard is not expensive. I would say it's not expensive, but if you compare it to its historical average, again, price to free cash flow, 5-year average, 41.7. It's at 32.8. Visa is average is 32.4. Price to free cash flow right now is 24, right? So again, Visa is more expensive, is cheaper compared to Mastercard, which is more expensive. But you also have to keep in mind Mastercard has always been more expensive. But again, That's not something you want to do, right? Again, technically, Mastercard is growing a little bit faster, right? Mastercard definitely is growing a little bit faster, but is it that much faster? I mean, revenue almost exactly the same. Operating income, okay, they're definitely a little bit better there, but net income, Visa is actually a little bit better. Operating cash flow, again, Mastercard definitely has the advantage there. So again, you are paying a little bit of a premium, but compared to its historical valuations, Visa is a better deal right now, right? Because it is, as a percentage, more below that historical average than MasterCard, right? Another thing that I really like about Visa as compared to MasterCard is, where is it here? Let's just find it. The shares, right? Both companies are buying back shares, but if you look at MasterCard, they've bought back 18%. I don't know. The company has shares outstanding year over year of negative 18%. This is great. Again, MasterCard 2%, which is still good, but Visa is a lot better, right? I mean, that's crazy. So Visa is buying back a lot more shares, right? Which is something you want to see as an investor, because that is value that they are giving back to the shareholder. Again, if we go and actually look at this, again, we see 11 million shares bought back. Again, they are buying back more and more over time. Again, look at this number is growing very nicely, right? So this is just another reason to buy a company like this, because they're buying back shares, they're increasing the dividend, they're very profitable. Like, this company checks all the boxes in my opinion, right? Obviously, my opinion, do your own due diligence, but it checks all the boxes, right? I mean, look at the free cash flow growth here. Again, very, very nice here. They're at an all-time high. Again, when you can buy a company that is at an all-time high in free cash flow that is a deep 25% cheaper than it's been historically, to me, that's just a no-brainer, right? That's just a no-brainer. Again, like, let's just see how cheap have they gotten this year. So they've gone down to 175, which honestly is their historical low. If we could get the free form to load here, that is their like 5 or 10 year historical low that it's gotten to. That here we go. It did load this time. Again, that time I'm very much assuming, I don't know for sure, but the historical low for Visa was in September, late September of this year, right? It got down to just below a 21 price to free cash flow. And again, let's go back 10 years here just to get a larger sample size. Sorry, it got down to 18, but again, that was in what? That was in 2014, so that was a long time ago, right? And again, if we compare it to Mastercard here, which is something I wanted to do originally, let's compare it to Mastercard. Mastercard, when you go back even further, Mastercard isn't quite as good. So again, we take the average price to free cash flow going back 10 years. Mastercard just under 35. Now it's just under 33. Visa is at 24, which is historical average. It's actually a little bit higher than MasterCard, right? But again, that's also because they were very high in like 2013. Let's just get rid of 2013, see how it looks. Okay, so now they go lower, right? That would explain that. So their average was just under 31. Now they're at 24. Mastercard 36, just under 33 now. So Visa still is better, right? And the thing you want to keep an eye on, right? I mean, let's go back 5 years. Let's just take a look at 5 years. 5 years, it's still quite a bit. Well, actually, honestly, it's about the same. But again, it still is cheaper, right? Again, if you're looking for value, in my mind, Visa is the way to go, right? I would want to pick up Mastercard. Like if Mastercard can get to, I mean, the low is 28. Let's say it could get to a 30. If it could get below 30, I would want to pick up Mastercard. But where the prices stand right now, I think Visa is the way to go, simply because their price, they're on sale, right? They're on sale. I like that they're buying back more shares, which means, again, they're delivering more value back to shareholders. I like that their dividend is growing faster. Again, that's something that is very important to me. Is I want to buy a company that, 10, 20, 30 years down the road, they've grown that dividend at 10, 15% a year. I would love to see that, because if you buy a company today and hold it for 30 years and it's growing 10% a year, that means that you have a dividend that is probably 4 times higher than when you bought it, right? So if the dividend's 1% right now, it's going to be 2% in 10 years. It's going to be 4% in 20 years, and it's going to be 8% in 30 years, right? So that's exactly what you want to see. You want to see those growing dividends, right? You want to see shares being bought back. You want to see not excessive debt. You want to see very high levels of growth, right? And again, I think that a company like this, they're just a cash cow, right? Look at their cash conversion, too. That's another very impressive thing. And that these companies, like a company like Visa and Mastercard, like they are very, very, very impressive when it comes to this, because they have to spend a very small amount of money to generate their income. I mean, do they have factories that they need to maintain? Like, do they have massive amounts of money that needs to be poured into research and development? Like, no, that is something that is very valuable when it comes to a company like this. So again, I wanted to talk about this because I think it is one of my favorite companies. And again, obviously my opinion, but I think that this is a very good company to hold over the next 10 or 20 years. Eventually, I think they will be usurped. I don't see them being as big as they are 100 years from now, but over the next 10, 20, maybe 30 years, I think that they're going to be a very good company, in my opinion. So again, if you liked the video, please hit that like and subscribe. I'd very much appreciate that, and stay tuned for more.